Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings to find the real story. Today we are looking at Rezolute Incorporated's latest report, where it seems like the company is holding on to its directors and planning for the future like a squirrel hoarding nuts for the winter. We will dive into what the shareholders voted on and what it means for the direction of the company. So buckle up because we are about to unpack it all. And before we jump in, if you like getting straight to the point insights from these massive corporate documents, make sure you are subscribed. Also, we have a growing community on Discord where we discuss these filings and more. It is linked in the description below. Alright, let's get started. This report is from Rezolute Incorporated, and it covers their annual meeting of stockholders, which happened on the 19th of November 2025. Think of this as the company's yearly checkup where shareholders get to weigh in on important decisions. The first big item on the agenda, and a pretty standard one for these meetings, was the election of directors. These are the folks who guide the company's strategy and make big decisions. We have a list of nominees here, and it is fascinating to see the vote tallies. For instance, Nevin Charles Elam got a whopping 592066610 votes for his election. That is a huge show of confidence. Then you have Young Jin Kim, who also received a substantial number of votes for, but quite a few more decided to withhold their vote. This difference is interesting. It might suggest a portion of shareholders had some reservations, or perhaps preferred other candidates for certain roles, even if they ultimately approved the slate as a whole. It is not as clear-cut as a slam dunk for everyone. Looking at the other directors, we see similar patterns of strong support. However, it is worth noting the numbers for Narissa Kraher, MD, and W. Vladimir Hogan-Huis, MD. Their votes for are over 45 million, which is still a lot, but the votes withheld are significantly higher than for some of the other nominees. This could hint at specific concerns shareholders had about their re-election, or perhaps a lack of a strong endorsement compared to others on the board. It is not a red flag, but it is a detail that catches your eye in a sea of large numbers. Next up, a crucial vote was to ratify Grant Thornton LLP as the company's independent registered public accounting firm for the fiscal year ending on the 30th of June 2026. This is basically shareholders saying yes or no to the auditors who check the company's financial books. It is really important for transparency and trust. The results here are overwhelmingly positive. A massive 6520645 votes were for ratifying Grant Thornton. There were very few votes against, only 937,798, and even fewer abstentions. This shows a strong consensus that shareholders are comfortable with Grant Thornton keeping an eye on Rezolute's finances. This is generally a good sign, as having a trusted auditor is vital for the company's credibility. Now, this next item is often called Say on Pay. It is a non-binding advisory vote where shareholders get to give their opinion on the compensation of the company's top executives. Think of it as a shareholder review of how much the big bosses are getting paid, and if it seems fair for the company's performance. Rezolute's named executive officers were up for this review. The results show a split. Over 40 million votes were for approving the executive compensation, which sounds good, but nearly 20 million votes were against. That is a substantial number of shareholders expressing concern or disapproval. While it is advisory, a significant against vote like this can send a strong message to the board that they might need to reevaluate their thinking on executive pay packages. It means a good chunk of their owners believe the compensation is not aligned with company performance or shareholder value. Moving on, Rezolute proposed an amendment to its 2021 stock incentive plan. Essentially, they wanted to increase the number of shares available for people to receive as stock options or grants. This is common when a company wants to continue attracting and retaining talent. They propose going from 1445000 shares to 2195000 shares. This is a pretty big jump, almost a 50% increase in the pool of shares for equity awards. The shareholders responded very positively to this idea. There were almost 59.1 million votes for the amendment and a mere 264,000 votes against. This indicates strong shareholder support for giving the company more flexibility to use stock as a way to incentivize its employees and executives. It suggests shareholders believe this is a good way to align employee interests with those of the company's owners. Finally, there was an adjournment proposal. This is a bit like a just-in-case vote. It essentially gives the board the authority to postpone the meeting if they need more time to gather votes, especially for that equity plan proposal we just discussed. It is a way to ensure they reach the required voting thresholds. The shareholders voted overwhelmingly for this, with almost 58 million votes in favour. This shows they trust the board to manage the meeting process and ensure that important decisions are properly ratified. Now, while this report focuses on the shareholder votes, it is always good to remember that the real guts of a company's performance are found in its financial statements, which are filed separately or often as exhibits to these kinds of reports. And speaking of exhibits, this filing points to an interactive data file, which is essentially a machine-readable version of the information, making it easier for analysts and algorithms to process. Looking at the signatures, we see Nevin Elam, the Chief Executive Officer, signing off on this report. This is the official stamp that says the company is putting this information out there. So, what is the big takeaway here? Rezolute Incorporated seems to have solid backing from its shareholders for its leadership and its plans to use equity to reward its team. The ratification of their auditors shows confidence in their financial oversight. However, the say on pay vote results are a clear signal that a significant portion of shareholders are keeping a close eye on executive compensation and expect it to be truly earned and justified by the company's performance. It is a sign that while the company is moving forward, there is an expectation of accountability when it comes to rewarding its top brass. The strong support for increasing the equity plan shares suggests a belief in the company's future growth and the people driving it. It paints a picture of a company focused on incentivizing its talent pool to achieve those growth objectives. Alright, that is our breakdown of Rezolute Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the executive pay concerns are significant? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching, see you next time.